Hello everyone and welcome to today's webinar for Auga Group. On behalf of Nasdaq Vilnius, I am very pleased to welcome one more company joining webinar session. And I am very pleased to introduce today's hosts, CEO of Auga Group, Mr. Linas Bulzgys, and CFO, Martynas Repečka. First of all, Mr. Bulzgys and Mr. Repečka are going to comment Auga Group performance and unaudited financial results for the third quarter of 2018. Then we will be answering questions after the presentation. So please feel free to send your questions using the question box on your webinar control panel. Mr. Bulzgys, I would like to invite you to start with the presentation.
Good morning, ladies and gentlemen. Welcome to Auga Group first webinar. Today we are going to analyze Group's business and financial performance for the first 3 quarters of 2018. And as it was introduced together with me today, this session will be run with Martynas Repečka, CFO of the company. So let's go to key performance indicators. So it is important to stress out that in agriculture sector, Q3 results have major impact on annual results, as the major part of crops are harvested during this period. And as per specific IFRS requirements for agriculture, cost and fair value of the harvest crop is recognized immediately into P&L. This approach is a bit different from traditional industries, when results are recognized not when goods are produced, but when they are sold from inventory. So Auga Group remains largely dependent on performance of crop growing segment. So here you see major financial indicators for 9 months of 2018. Group revenue was 42.2 million euros, or 50% up comparing to same period last year. However, group key profitability indicators were significantly behind last year achievement. Gross profit was 1.8 million versus 14.9 million last year. EBITDA respectively 1.7 million versus 13.2 million. And all this resulted in bottom line group incurred 4.9 million net loss comparing to 7.3 million profit for the same period last year. So firstly, we will cover crop growing segment, which, as we mentioned, remains most important. So, as you know, last season for agriculture was rather challenging. Extreme climatic conditions where we were facing in larger part of Europe and in Lithuania as well. Heavy rains in 2017 were followed by significant drought in summer 2018. Due to acquisition of additional companies, increased its cash crop area by 50%. So this year we had to cultivate 27,000 hectares versus 18,000 hectares last season. And rainy 2017 resulted in significantly larger areas which we were forced to seed with summer crops. 80% of all cash crops this year were summer crops, comparing to 56 in 2017. Due to specifics of organic farming, crop rotation, and the historically high profitability, about half of summer crops this year were legumes such as peas and beans. Drought basically affected most of the types of the cash crop. However, legumes were particularly negatively impacted by the drought, and this from this came the most significant effect on bottom line of Auga Group. As generally, organic crops are more expensive and significantly more expensive and have higher margins, variation in yield gives significantly, both positive or negative, gives significantly bigger variation on profitability of the company. Here we have breakdown of major crops, crop types, and breakdown by area, yield, and fair value and cost. As mentioned, area of legumes increased by almost 160% from 4.1 thousand hectares to 10.7 thousand hectares, and yields on these crops were lower. Wheat was 34% below last year, 2.7 tons harvested versus 4.1, and legumes yields were even 55% below last year, 1.5 tons harvested versus 3.3. So in total, crop growing segment generated 3.8 million euros loss, which is fair value valuation minus cost, and so total negative impact versus 2017 being 10.6 million euros. So we in agriculture we have basically three key performance indicators: yield, cost per hectare, and price per ton. So we are going to cover these three indicators in more detail for major crops. Here we have internal statistics and Lithuanian statistics on wheat and legumes. So in 2017 on wheat, Auga reached 4.1 ton per hectare, when conventional yields were 4.9, and organic farming yields were 2.3 tons per hectare. So this year we reached 2.7 tons, and conventional farming reached 3.7. So far there are no data on organic farming. On legumes in 2017, we reached 3.3 tons per yield per hectare, which was even higher than 3 tons achieved in conventional farming. The prices of organic legumes are normally almost 60-70% higher than conventional, and cost per hectare is around the same or even lower. This makes legume a very attractive crop in organic farming commercially. As well, it fits very well in crop rotation, which is very important for organic farming long-term success. So this year, Auga yield on legumes was only 1.5 tons per hectare, and conventional farmers managed to reach 2 tons per hectare, also significantly below last year achievement, and we still don't have organic farming numbers. Next slide basically relates this KPI to financial statement. Which chart details total cost, fair values, and profit loss per wheat and legumes in 2017 and 2018 in absolute euro numbers. As can be seen, wheat and legumes incurred together 4.2 euro loss versus 3.8 million euro profit last year. Just for comparison, had company in 2017 achieved the same yield parameters on wheat and legumes as in 2017, the result would have been better by 10 million euros on gross margin level. Again, I make this comparison just to illustrate yield impact significance on financial results in organic farming, which I mentioned earlier. This table analyzes other two KPIs for wheat and legumes, which is cost per hectare and sales price per ton for two respective periods in 2017 and 2018. To make the cost comparison more meaningful, we eliminated one-off effect of KTG land cultivation. I just remind you that we took over KTG in January 2017, and the lands were not seeded and were not cultivated. So in 2017, most of these lands were kept as fallow, but we still cultivated them, fighted weeds, and as we say, treated these lands and prepared them for this year crop seeding. So the cost incurred on this operation was about 3 million euros, and this cost was accrued for next year season. So this year, this effect comes into P&L as they are expensed together with harvested harvest. So eliminating one-off KTG impact on cost, we can see that cost for major crops remains rather on the same level. Wheat cost per hectare was 6% higher, mainly due to more expensive seeds, as it was big demand on summer crop seeds this spring, and also some additional effects of fuel increase in fuel prices. On legumes, actually, we even have a lower cost comparing to last year, minus 12%, mainly due to better agronomical processes which we implemented for preparation of land and seeding processes. Sales price for key commodities remain also rather stable, 5% increase on wheat and 5% decrease on legumes recorded at the end of the reporting period. And so this partially also, the prices also partially are affected as we have some part of our crops still not organic from last acquisition of Agro Corporation. This crop is so-called P2 harvest. So this also includes in this average calculation. So this stable cost per hectare and pricing parameters of major organic commodities, I think, demonstrates that the key company business model assumptions remain unchanged, and company continues to reach planned KPIs for costs and sales price. It's also important to stress out that in 2018, autumn was very favorable for land cultivation and winter crop seeding process. The company managed to seed almost 53% of land dedicated to cash crops with winter crops, mainly wheat. Last season, this number was only 20%. In 2016-17 season, it was 44%. Normally, potential for winter crops is higher than for summer crops. For instance, this year, winter wheat generated 27% higher yield than summer wheat. Good weather this autumn is also allowed us to prepare with high quality areas for summer crop seeding, which is very important in organic farming, as successful weed management requires sufficient quality works done in both autumn and spring. So I will hand over now to Martynas, who will cover other remaining segments.
Good morning. I'm Martynas Repečka, CFO of Auga Group, and as Linas told, I will cover 3 additional business segments of Auga Group. And the first one is mushroom segment. Oh, sorry. Okay. And in the first 3 quarters of 2018, the revenue of mushroom segment was increasing, and revenues from mushroom sales increased 9%. But while combined with the decline in mushroom seedbed sales, the total revenue of mushroom growing segment increased around 5%. And the income growth during 2018 mainly relates to the increase of average price of mushrooms sold. And the average price increase relates to the increase in average price of non-organic mushrooms, as well as the increased share of sold organic produce in mushroom segment. And organic produce share in total revenue increased from around 8.6% in 2017 to 11.3% in 2018. The increasing share of organic produce in mushroom segment not only reflects the strategic goals of Auga Group, but also improves the results of overall mushroom growing segment, because the average price of organic mushrooms is around 50% higher than conventional ones, but the costs are very similar in organics and non-organic mushrooms. And now I would like to switch to the dairy segment. And the result in the dairy segment for 3 quarters of 2018 amounted to 1.9 million loss, comparing to 0.6 million gross profit during the same period in 2017. And the deterioration of dairy segment was mainly driven by increasing cost of feed. And the cost of feed resulted both in higher milk production costs and cattle growing costs. Cost of feed, the increase in cost of feed relates to 2 reasons. And the first one is due to rainy autumn, the preparation of grass feed was complicated, and part of the grass was not harvested at all, although the cost for field preparation and moving were inquired. And the quality of collected grass feeds also was relatively poor. And all this led to the increase of cost of grass feed. And the other reason for increase of cost of feed is that because organic grains was used for cattle feeding during 2018, and these grains were harvested in 2017, and first time they were evaluated at organic prices to reflect their fair value. That also increased the cost of feed. And during 2018, the share of milk sold at organic prices in revenue increased to around 43%, comparing to only 16.6% in the same period, 16.6% in the same period of 2017. However, lower market prices for non-organic milk led to the average sales price of milk in 2018 versus 2017 almost the same. And the share of organic milk sales fluctuated throughout 2018 at around 30 to 40%. And but on September, the share significantly increased and reached almost 95% in November already. So the increasing share of milk sold at organic prices also results in an increase in average price of milk sold. And the last segment I would like to cover is end consumer packaged goods. And this segment is considerably smaller compared to other Auga Group segments. However, from strategic perspective, Auga Group sees this segment as of great importance due to diversification of current business lines, as well as higher value added to existing products. This segment covers ready-to-eat soups, packaged vegetables, bottled milk and milkshakes, and other products. And the revenue of end consumer packaged goods segment during the first 9 months of 2018 almost tripled compared to the same period last year. Also, new products were added, such as bottled milk and milkshakes. Cost of sales was rising as well, because most of the products in the segment are still selling on comparably low scale. That results in high cost of sale and low margins at the moment. Now I would like to switch to operational expenditures. And the level of operational expenditures during first three quarters of 2018 was highly impacted by two so-called one-off effects, or more precisely, the costs related to termination of Arginta Engineering purchase agreement, and the other one is reversal of impairment of Karakash Agro and Karakash Company's property, plant, and equipment, which had an opposite effect, or in other words, positive effect on operational expenditures. And the assets located in Crimea Peninsula were earlier impaired due to uncertain situation in this region due to annexion of the region by the Russian Federation. And in May of 2018, the group has completed the sales transaction of Karakash Agro and Karakash companies. As a result, the previous impairment was reversed to reflect the fair value of the assets. And for better comparison, we have eliminated these one-off effects from the operational expenditures. And as you can see from the graph, operational expenditures level remained more or less on the same level in 2018. And one additional topic I would like to cover today is Auga Group working capital and working capital changes. And for this analysis, we use adjusted working capital measure, which eliminates cash and financing elements from working capital calculation. And such calculation allows us to see how much capital is needed to ensure operations of Auga Group. As it can be seen from the graph, the working capital requirement has been growing steadily in recent years. And this evolution may be attributed to two reasons. The first one is transfer to organic farming, as organic farming model is more working capital intensive, at least in Lithuania. This is because the harvest is sold more evenly throughout the year until next harvest, and not right after the harvest, as in conventional farming. Moreover, a significant share of raw materials is bought without any defer in payments, as materials are bought from small farmers and businesses. All this causes short-term assets, especially inventories, to rise more than accounts payable. And the other reason is that in the last 2 years, Auga Group significantly expanded the area of cultivated land from around 25,000 to around 38,000. That's a 52% increase. And working capital requirement and area of cultivated land is directly related, as you need additional inputs to short-term biological assets when cultivated land area is expanding. This relation can be seen from the provided graph as well, which illustrates that working capital has grown from around 15 million euros in third quarter of 2016 to around 35 million euros in third quarter of 2018. That's a 20 million euro increase. And such intense working capital expansion caused an increase in bank financing as well. And since dynamics of working capital is of great importance to Auga Group activity, we have included additional notes to our interim financial statements to give readers better understanding of the movement in separate working capital elements. And I will cover two of these elements in the following slide, that is movements in biological assets and inventory. The table provided covers both non-current and current assets, and only current biological assets are part of the adjusted working capital. And I will cover this. I will discuss more in depth current assets. As it can be seen, the majority of current biological assets are in crops, which is inputs to the soil, crops, and harvest. And let's discuss movements in crops column in 2018 in more detail. The total accumulated expenses during first 9 months of 2018 to the crops amounted to 32.1 million euros, and additional 8.9 million were carried forward from the last year. So total inputs in 2017 to 2018 year harvest till the end of the reporting period were around 41 million euros. And the fair value of the crops harvested until 13th of September was 24.1 million euros. And 3.8 million loss at the point of harvest was recognized. Since not all crops were harvested until 13th of September, the result of 2017-2018 year harvest or season is not final. And the remaining accumulated expenses were around 13.1 million. And it is important to notice that this balance at the end of the reporting period also includes soil preparation, seeding, and other works for 2018-2019 season as well. Well, I hope that my explanation will help you to better understand the movements in biological assets and how they are disclosed. And the last table that I wanted to cover today is inventory movements. And in case of inventory movement, the split between most important items are provided. I will not go into details for each items provided, but just several comments. For instance, mushrooms and milk items, mushroom and milk items here have low inventories compared to the total turnover, and this relates to short life of these products. And in contrast, the inventory levels of wheat, legumes, this is wheat, legumes and other crops are considerably higher on 13th of September, as this production can be stored and sold during longer period of time. However, all inventory of cash crops is usually sold until the next harvest, and it can be seen from these lines: sales, that is the line, and sales and production. And for forage items, forage item shows inventories that are used for feeding of livestock of Auga group. The value of forage used in during first 9 months of 2018 was around 8.8 billion euros. And finally, the column raw materials include seeds, manure, straw, spare parts, and other materials used in production. And now I want to give back word to Linas Bulzgys.
So for end of this presentation, I just like to remind our key strategic statements. So we are focusing only on organic and sustainable food production, and we try to achieve efficiency by utilizing scale of operation, synergies among different agricultural sectors, and apply latest technology to improve all production processes. We also aim to grow share of value-added and consumer products using in-house and contract manufacturing processes with full process control from field to shelf. And our aim is to provide our consumers with affordable organic food produced in the most sustainable way. So despite weaker result this year, company sticks to its strategic direction. Auga is involved in 4 different business segments, which were covered today: crop growing, dairy farming, mushroom growing, and then consumer packaged goods production and sales. The group's long-term strategy remains to reduce dependency on crop growing through further vertical integration in organic food chain, expanding end consumer product segment, entering high organic feed market, high yield organic feed markets, with the strong focus to overall sustainability in agriculture and food supply chain. So weaker results in 2018 may slow down implementation of some of development projects which were disclosed this year, as full-scale implementation assumed using of both own funds and additional banking financing. And with results of 2018, attraction of banking financing for investment would be complicated. So we will have to rely on our own sources. So currently, board is working on key priorities for 2019 as to regards of investment projects. But I can make some highlights that for instance, acquisition of and integration of two agricultural companies is basically completed. The companies are properly equipped and ready for next year season. The working capitals are restored. We are starting implementation of very soon of one important stage of combined feedstock production plant, which will allow us to produce high quality feeds for commercial sales and basically to start testing the market next year. We also recently completed some not big scale, but expansion in egg chicken farming. And also we continue preparation for other projects like permits for construction. And but yes, apparently the implementation will be phased for other projects more towards end of 2019 and 2020. So now I think we are ready to answer your questions.
Okay, Mr. Bulzgys and Mr. Repečka, thank you very much for your presentation. Now, indeed, we will continue with the questions. And you can still send your question in the section on the right side of the screen. Okay. Let's start with the first one. Prices of agriculture commodities in global commodity markets increased substantially this year because of weak harvest in many countries, not only Lithuania. Why didn't Auga benefit from our agriculture price increases this year? Was majority of its harvest sold via forward contracts?
Yes, in the conventional markets, we saw a significant increase in the market prices. We also should take into account that these conventional prices were at very low levels basically in 2016 and 2017. So this unfavorable weather conditions in 2018 really affected supply demand and prices recovered significantly. So the conventional farmers really have some compensation for lost harvest. However, in organic market, although prices fluctuated and at some moments they were also higher, but there was no such significant increase in prices. as these organic commodities they are quite expensive, and the prices, as we always stated and demonstrated during various our presentations, are much more stable in organic farming. So we didn't benefit so much from this increase. We really some of the commodities were sold. I would not call it forward agreements, but basically the deals were done during the summer. With the prices which were basically prevailing in last years. But still we are continue to sell some remaining harvest currently at a little bit higher prices. And as I mentioned during presentation, if you look at our average prices, of course, they are a bit affected by the fact that we have also transitional organic product in our inventory, and which cost price for which is lower. So second question.
Okay, second question will be the following. What is Auga's EBITDA target for 2019?
Maybe I will answer this question. We're not providing any, let's say, forecasts or targets for the coming periods. So we will not discuss, let's say, this question into more details.
Thank you. And what is the share of harvest sold or contracted of 2017-18 harvest?
Yes, I cannot tell, let's say, the exact percent, but at the moment the percent is around 80 to 90% of cash crops harvested in this year's season.
And could you please answer what will be the structure of crops of 2018-19 harvest? Wheat, other cash crops, forage crops?
As I mentioned, the big part will be winter crops, which is already seeded. About 53% will be winter crops, out of which majority is winter wheat. As to regards of summer crops, there will be mixture of legumes, sugar beets, which is very profitable crop, also buckwheat, soya and others. But just to point out that of course legumes also will form big part of next year, despite let's say poor results this year, because this is natural crop rotation element, and also this is the biggest crop for feeding animals, and is needed for feeds production. Of course, we are looking at some additional measures what we can apply, what biological preparates we may use for such instances as this year, and we find them and we will certificate them, because in conventional farming, of course, there are some more, let's say, instruments how to protect the plant from drought.
Thank you very much. And next question, please provide an update on the bank financing, including waiver on covenant as well as related party loan. Is the related party loan drawn down? If so, where does it appear?
I will cover the answer to this question. And first of all about waivers and the situation with the banks. As it is disclosed in our financial statements, we have received waivers from banks for the third quarter. of 2018, and actually we have, let's say, made an agreement with the banks for the further periods, that is not to apply this debt-EBITDA covenant until the next harvest. But it is important to state that this let's say agreement still needs to be approved by the final committees of both of major creditors. So the situation is like this at the moment. We are expecting to get approval in the coming weeks. And for the other part of the question about this related party loan, I guess that this question is about the Baltic Champs Group loan of 4 million, and the loan agreement was signed only at the beginning of October. So this loan is not anywhere disclosed in the balance sheet at the end of reporting period. That's 13th of September. So that would be my answer.
Okay, and is there still harvesting results to come through in Q4?
Yes, several crops like maize, soya, buckwheat were not harvest was not finished in the third quarter. So yes, additional results will come in the fourth quarter from the harvesting.
There is a significant increase in parent company debt, which classified short term. Can you provide more insight into this, please?
Yes, this is a credit line facility that is used not only by parent company, but by the whole group. And this is our major credit line facilities. It's 17.6 million euros in total.
There are few more questions. How much costs were related to SPO? What is expected return or payback period for new investments? And please elaborate on 4 million loan from Baltic Champs. What was the reason for that?
The total cost for SPO related, which was incurred by the company, is around 400,000 euros. The next question: what is expected return or payback period for new investments? So general rule, and as it was disclosed in prospectus, we do not consider investments with higher payback period than, let's say, from 4 to 6 years. And please elaborate on 4 million loan from Baltic Champs. So the major shareholder provided additional loan to Auga Group in order to the company can continue to implementation of some stages of investment projects, because as I mentioned, attraction of bank financing for investment project implementation would be complicated at the moment.
Minutes and questions. So just a moment, please. And there is one more question related to debt EBITDA ratio. So what was the exact level of debt EBITDA as per your calculations for Q3, and what is the covenant level required?
I will answer this question. The exact, I will start, let's say, from the covenant level required. It was disclosed in our prospectus, but it depends on the exact loan agreement, but it's around 3.5 to 4 debt-EBITDA ratio. And the exact EBITDA level for the 12-month rolling period not reached 2 million. So we breached governance in several times, but as we have stated, we have received bank waivers for the third quarter.
And maybe one more related question. Does the breach of the covenant affect your interest costs or any other loan terms?
Currently, there is no such statement in the loan agreements that due to breaches in the covenants, interest rates will be automatically increased. But yeah, it might be in the future that interest rates will be reviewed by the banks.
Auga operates 38,500 almost hectares of land. Is all the land certified as organic? If no, then how many hectares is not organic and when it will be transformed to organic?
So yes, the major part of our lands this year were fully certified organically. So the last big part, which was Agra Corporation, 5.2 thousand hectares, was successfully certified in June. Sorry, Agra Corporation next year will be certified fully with organic certificates, and then the land will be fully certified. And we sometimes we have a bit of land in transition, as we sometimes rent additional areas, but these numbers are insignificant. So by June 2019, majority of lands will be fully certified.
Thank you very much. Do you have a sales split by country and by product? In other words, where do you sell and which products in 2017, 18?
I think the more detailed analysis, geographical analysis, can be found in our recent prospectus, and general directions are not much changed. If we talk about commodities sales, so majority of the products is sold in EU markets, and mainly organic commodities are shipped to Scandinavian, German, France, Benelux markets, both for feed production and for food quality grains like wheat goes for food production. And if in terms of mushrooms, majority of the products are sold in Baltics and Scandinavia. And if we talk about other end consumer products, in fact, geography is very wide. We sell to Poland, to Scandinavia, but also the big transactions recently were published about entering Canada market, also Japan, Also, we completing US FDA certification process, and there are big potential projects in US markets.
How soon do you think we can see a recovery in the crop segment? And how do you see cash flow generation over the coming months?
So the results in cash crop segment, of course, they become apparent when the harvesting is completed. So they will materialize in Q3 next year. And talking generally about cash generation, I think one of the reasons Martynas covered net working capital development was also to demonstrate that all the cash generated in prior periods was reinvested also in expansion of land areas. And at the moment, this expansion is completed. We do not plan further expansions. And the cash generated in this segment will appear and will be used for investment projects financing.
The time is almost off, so we will take only the last question, and the remaining questions will be answered to you in the written form after the webinar session. So what happens in case the banks will not approve the waiver on the covenant breach?
I think that this question relates to the fourth quarter of 2018, because for the third quarter of 2018, we have received the waivers. And talking about the further periods, as I have mentioned, we are discussing with the banks already the situation, and we already, let's say, agreed on the solution of this situation, and that is not to apply debt EBITDA covenant for the coming 4 quarters until the next harvest. But as I have mentioned, this solution still needs to be applied by the committees of both of our major creditors, that's Swedbank and Luminor Bank. But we expect this happening in the beginning of December.
So, Mr. Bulzgys and Mr. Repečka, thank you for your time. On behalf of Nasdaq Vilnius, thank you everyone. A record of the presentation will be available in the Nasdaq Baltic YouTube channel, webinar playlist, and also on the company's website. Participants, thank you for joining and hope to see you next time.